Greetings from Lagos, Nigeria. Welcome to our fireside chat on the purpose-driven capital, how purpose-driven capital can change the world for good. Access to finance is the single biggest hindrance to the development of small businesses, as well as startups across the world, especially in sub-Saharan Africa. The World Bank estimates that in sub-Saharan Africa, the formal SME sector has an annual financing gap of $245 billion US. In Nigeria, for example, the National Bureau of Statistics stated in a 2019 report that out of the 41.5 million MSMEs we have in Nigeria, only 2 million MSMEs have access to capital. That is 5% of the total MSMEs in Nigeria. It is estimated by PwC Nigeria that the annual financing gap is approximately $1.5 billion. One way of addressing this financing gap is through investments. Annual investments in African startups is forecasted to be approximately $1.2 billion in 2020. I would like to introduce our keynote speaker, Michael Moe. Michael Moe is the founder of Global Silicon Valley, GSV, a modern merchant bank that invests, advises, and partners with the fastest and most dynamic companies in the world. He serves as the CEO of GSV Asset Management and the executive chair of GSV Capital Corporation. He's regarded as a preeminent authority on growth investing. Michael authored the business bestseller, Finding the Next Starbucks. Michael published his second book in 2017, The Global Silicon Valley Handbook, which highlights the top innovation hubs around the world. Michael will be sharing his thoughts on purpose-driven capital. Is profit with purpose the new norm? What role does purpose-driven capital have in advancing the COVID-19 recovery process? And most importantly, how purpose-driven capital can change the world for good. Good afternoon, Michael. I know it's very early where you are in California, so thank you for joining us. Over to you, Michael.
No, it's absolutely my pleasure. And we're all virtually together in Edinburgh. I can't wait until we're physically together in Edinburgh next year. But this is a terrific event, and I feel honored and privileged to be part of it for the second year. When we look at the classic investment opportunity is where there's a problem, the bigger the problem, the greater the opportunity. As you look at what's going on in the world today, there is no greater problem than how to give people access to the future. So our North Star as both an investment firm as well as just a business and a philosophy and a motivation is to ensure that everybody has an equal opportunity to participate in the future. How are we going to do that? By bending the arc of human potential. Why? Because it's fundamental for the future society. And I don't think I'm overstating that. The world is literally on fire. Certainly the United States is. So how do you give everybody an equal opportunity to participate in the future? It's a very complex problem. It's like whack-a-mole. You hit one issue and another issue pops up, and that's a reality of it. So we think the foundation of how we give people access to the future is giving them quality education knowledge. That's the greatest transformation agent that we're aware of, and we have a huge focus on digital learning, but other aspects of this equation. So how do we get the roadblocks to get that access to learning? You have time, you have money, technology, engagement, access, and gender, but it's more complex than that. We have poverty, food, shelter, health, safety, racial, the UN's sustainability goals. They're all very, very real as it relates to impediments for how we give people the fundamental right to participate in the future. So access to the internet or worrying about what you need to do for your math equation is just not that big a priority if you've got to walk 5 miles to get fresh water for your family. In fact, this year, 3.4 million people will die due to lack of clean water. 9,000 people will die today. 9 million people will die from hunger this year. 25,000 people will literally starve to death today. 10 people have died while I've said this sentence. So when we look at, what happened is we went into this decade, there was a lot of optimism and excitement about fixing a lot of issues and challenges that faced the future of society. And what started as optimism is turned into a year that is hard to even imagine. Obviously, the coronavirus epidemic, pandemic, 1 million people have died from this worldwide. 200,000 people have died in the United States. And from an economic standpoint, and from April to June, there was a 33% drop in GDP, which is unprecedented. 40 million people filed for unemployment. $6 trillion was spent on the coronavirus in the United States alone. And that's just the beginning of it. 100,000 people will have died this year in the United States from opioid overdose. That's up 20%. And a lot of that is based on just some of the derivatives off of this pandemic. 1 million people will have died from suicide across the globe this year, again, up significantly. So we've had fires in Australia to start in January, locusts in Africa, killer hornets. We've had the United States as major cities, huge civil unrest, the West Coast literally on fire. And so it's probably not a coincidence that the #1 show in the United States this year has been The Masked Singer, which is, if you haven't seen it, it's quite a spectacle. And we all know who's to blame for this, all these issues. It's Carol Baskins. If you saw the Tiger King, she did get let go from Dancing with the Stars. So maybe there's justice in the world. I'm sorry, just kidding. We had to have a little levity with all the seriousness of things that are taking place. So there's 10 major trends I want to talk about quickly about what has happened with the pandemic. And as a basic comment, what you've seen are many of the trends that were in place before the pandemic have now just accelerated. So 10 trends. 1, old McDonald had a farm, E-I-E-I-O. Well, new McDonald has a startup, E-I-E-I-O. It's all about entrepreneurship, innovation, education, impact, and equal opportunity. The second trend is we are the world. Ironically, in this world of isolation and quarantine, the world's actually become more interconnected. Even this conference that we're having, people from around the world, I kid, but I think it's actually true. Greenwich Mean Time is becoming the new normal time. And so we're seeing this happen in a major way. Our firm's name, Global Silicon Valley, you're seeing the mindset of innovation and entrepreneurship that has made Silicon Valley such a remarkable place, spreading throughout the world at a really amazing clip. And English has become the language to connect people, with 2 billion people around the world now speaking English, which is a good thing since it's the only language I can speak. The third trend that we're seeing is everything's smart and everything's connected. Smart cities, smartphones, smart homes. In the home world, the office has become optional, and it's becoming even more optional. Zoom room at home is fundamental, essential. Number 5, winner take all. This is a trend in technology in general, the internet specifically. It's all about disproportionate gain to the leader in a category. Unfortunately, it's also true with people. Sustainability. Generation Z is demanding that if not only to work at a company, they need to be sustainable, but to buy from a company, they need to be sustainable. Protecting the earth is taken a priority, which is an amazing thing and a great thing. Green triumphs over growth. Growth is important, but green's way more important. Data is king, but interesting trend, increasingly, it's not their data, it's your data. Number 8, the world is awash in information. So how do you separate noise? into signals and ultimately insight. Number 9, subscription businesses are everywhere. So it's not just software as a service, it's fitness as a service, it's music as a service, it's entertainment as a service. And number 10 is contemporary capitalism. And, Edinburgh, the home of Adam Smith, his invisible hand is broken. Capitalism has been hijacked by, I call it Darwinian capitalism, but there's change afoot. Milton Friedman made the comment 50 years ago, the only corporate social responsibility a company has is to maximize its profits. The good news is that philosophy is as dead as Milton Friedman. So this new philosophy of a mission corp that we have, which is basically combining the ambition of a for-profit with the heart of a not-for-profit, with multiple stakeholders, not just shareholders, employees, customers, community, environment. This is the new reality. And so anybody who knows me knows that we had 4 P's we look for in a company we invested in: people, product, potential, predictability. We've added a 5th P because of the importance of that's purpose. We think the great companies of today and tomorrow need to have a North Star and a purpose to thrive and be successful. So Thomas Piketty 5 years ago wrote Capital, which was this treatise on inequality that has taken place. The basic Thomas Piketty formula was R is greater than G. So the return on capital is greater than the GDP per capita growth, which basically gets growing inequality. In fact, we've seen that. In the United States, 50 years ago, you had 250,000 millionaires. Today, you have 18 million millionaires. The 8 wealthiest people in the world have half the world's wealth. And the median in the United States, median income of the bottom 50% hasn't changed in 50 years. Look what's happened during the pandemic. It's absolutely startling. Back to this point about trends that were in place before have accelerated. The 5 largest market cap companies in the world, Amazon, Microsoft, Apple, Google, and Facebook, their market value in the 6 months from March to September increased almost double, $3 trillion. Zoom, not surprisingly, their market value increased almost 5-fold. Tesla's increased almost 5-fold. And you look at on individuals, Eric Yuan, the CEO of Zoom, his net worth increased $2.5 billion. Elon Musk's personal net worth increased $17 billion. Jeff Bezos' personal net worth increased nearly $50 billion. If you look at all the billionaires around the world, their net worth increased almost $1 trillion during the last 6 months, while most of the rest of the world has been devastated. So this trend of growing inequality has accelerated as well. As Aristotle said, inequality is the parent of revolution, and that is a very fundamental issue facing the future of society where this situation exists, so it has to get fixed. So Malcolm Gladwell talks about human capitalization rate, which is different than GDP per capita, and that really is talking about the percentage of society that is fulfilling its potential. And we think that's a really critical piece to measure the health and happiness of a nation. And again, I think there's a tremendous opportunity from an investment standpoint if you think about how do you change that capitalization rate. So what's the biggest impediment to that? It's poverty. So I like to say, so how do we stop poverty? We stop cops. So if you've heard this whole defunding the police in the United States, it's not about defunding the police, believe me. What it's about is stopping the cycle of poverty. We have to stop the cycle of poverty to have this human capitalization rate increase to a point. So there's no silver bullet to accomplish this, but there is a truth. As Nelson Mandela said, education is the most powerful weapon which you can use to change the world. And we believe that. So in the knowledge economy, what you know, your education makes a difference for an individual, a company, and for that matter, a country. What's taken place in the past 6 months is remarkable. We've had 1.6 billion people that have gone online for education. Essentially, 20% of the world's population has been thrown the deep end of the online learning pool, told to sink or swim. So some of them have sank, some have crawled to the edge of the pool, got out, so they're never going back in, but most are flailing around and trying to say, gosh, we like it, the genie's not going back in the bottle. Online learning is here forever, and that's a really important point. So what we say is Basically, there was BC before Corona. There's now going to be AD after the disease, and this is the dawn of the age of digital learning. And so before Corona, BC, learning was physical, expensive, and it was linear. After the disease, it's digital, it's exponential, and it's inexpensive, if not free. That's fundamental. And so before Corona, we expected the digital learning market to become $1 trillion by 2034. It's accelerated in a major way. It's now half that time to 8 years. The future has been accelerated to the present. You see companies like Coursera, which we're an investor in for full disclosure. It's now got 70 million learners around the world. So it's seen almost a 250% increase in their registrations in the past 6 months. And by the way, of that 70 million, almost all of them are taking classes from Coursera for free. So we call this weapons of mass instruction. And what's also happening is you have a new generation of kids. I call them, they're Corona kids or COVID kids, vid kids. And these vid kids are going to be doing things different for forever. This is back to this BCAD concept. So as we think about investment opportunities and what needs to happen to get fixed, back to fixing problems, bigger problem, the greater opportunity, we're looking to find meaning through learning and purpose through work. We think those are the key issues. And we know that education is life's original accelerator. So when we go back to Thomas Piketty's formula of rate of return on capital is greater than GDP per capita growth, which is creating this greater inequality, the good news is there's more capital that's looking to put money into companies that have purpose and for good impact capital than there are ideas. And so this explosion of entrepreneurship, we expect to be addressing these most major problems that are facing society today, the type of things that the global ethical finance conference is focused on. And we think that's wildly positive for the future of society because entrepreneurs fix things. So as Victor Hugo said, there's nothing more powerful than an idea whose time has come. Well, impact capital, entrepreneurial capital, purpose-driven capital's time has come. Thank you very much. Appreciate it.
Thank you, Michael, for that very insightful presentation. So following on from that, I would like to ask you some further questions. Like any other period of global change, is now a great time to launch a business, especially in Africa, where we see high levels of entrepreneurship and very little access to capital. Do you think that once you have purpose, there's opportunity to grow those businesses and to start some of these new businesses?
What history has shown is that when you're going through these different transformational or significant challenges, interesting businesses emerge from those times. So if you look at after the financial crisis in 2008, for example, the iPhone enabled a number of new businesses that happened from around the world, whether that was Uber or Airbnb, or you go on and on, that were basically driven in the Dropbox and the ashes of the financial crisis. You look at after 9/11, you had businesses like Facebook. You had Tesla, Facebook, SpaceX, YouTube. All these companies happen in this environment where there's enormous challenges taking place. And you go throughout history, it goes on and on and on, back to the Black Plague. We look at Africa. Africa is certainly one of the most exciting places on earth from a demographic standpoint, from a growth standpoint. I believe of the 10 fastest growing economies in the world, 9 of them are in Africa, which is, I think that's a correct statistic. At least I was told that, but no, I think that's a correct statistic. And so the excitement and the energy around it are tremendous. And I think one of the interesting things is, like you've seen, you can do kind of these leapfrog innovations. And so there's linear paths that typically you see happen going from A to B to C to D. I think in Africa, in many ways, you can go from A to D. And by looking at both the fresh environment and what the challenges are. Again, the entrepreneurs do two things: they solve problems or they address needs. And so by addressing those, and you can incorporate this new, and it's not this aspirational philosophy where people want to change the world for good. It is basically, I think, embedded in the society that we're in today. I mean, that's what people are starving for. It's not something that would be nice to do. It's part of the air. And so I think that's a wildly exciting and encouraging environment for Africa and entrepreneurs in Africa that are addressing problems and needs. And I think capital ultimately is pretty smart. Capital ultimately finds its way to where those opportunities are being developed. And I do believe this impact capital, which there's a growing amount of impact capital that's really looking to do more than just create the return. In fact, they think they're basically create the return by doing good things. So I think that's all very positive in terms of fundamentals and opportunities as it relates specifically to Africa.
Okay. Would there be specific sectors that you think people will be interested in funding? Or for now, it's those sectors that really address the issue of poverty, especially because you can see that in Africa, we have the highest rate of poverty, and the coronavirus is just going to exacerbate that.
Yeah, so I mean, again, I think I went through it quickly, but I do think if you even go down the UN different issues, and what are those different issues, entrepreneurs that focus on those issues, I think are going to do well, because these are fundamental problems that are facing how people participate in the future for society. And I do believe that there's both capital for those entrepreneurs that solve those problems, and I think there's going to be the right kind of returns for investors that are focused on it. So I mean, if you go through that, so again, I believe the foundation of all this is education. I think education is the core enabler that is fundamental. But there's obviously, as I've made the point, education's sort of irrelevant if you're starving to death. So how do you fix things? How do you fix things? How do you help change that dynamic? How do you make sure people have access to clean water? But areas like financial technology obviously is an area that is booming, and again, as you're seeing growth and you're seeing opportunities created, that's just there's a growing need in society. So it's certainly financial technology, communication. That's there's the 5G is going to enable a number of different entrepreneurs to create solutions and address needs in that specific area. Healthcare for sure is in wellness. Healthcare is critical, obviously big, and a lot of important initiatives going on. But I think it's as you see this kind of mushroom of opportunities, this ecosystem develop. So there's going to be multiple. It's certainly not going to be just one area, but I think you start with the foundation of where there's the problems. How do you create solutions to those problems?
Excellent. So I'll pick on one of the SDGs, which is SDG 5, gender equality. The corona pandemic has really exacerbated the gender inequalities. And it is estimated that female entrepreneurs only roughly receive about 2% of venture capital investment. So how should VC firms address this huge gap, especially for those entrepreneurs that are just starting off businesses?
Yeah, so, and again, I think the society, and it's obviously a critical need to create equality. One thing that I'll say, first of all, just not an advertisement for GSV, but we actually have way more women working in our firm than we have men. And it's not because we said, gosh, we're just going to hire women. We just, it's worked out. It's worked out that way. And I'm proud of that. But the fact of the matter is we just did it because there's a lot of talented women. that we were able to bring on, and now it's a real advantage for us because people look at that, it is unusual. I'll also say as a trend, and it's frustrating, with women's as 50% of the world's population, but interestingly, this statistic's correct in the United States, and I don't know what it is globally, I should, but 60% of the students in universities in the United States today are female. So if we're in a knowledge economy and knowledge is power, if you want to look at the future, it's about women. I mean, women are getting the education needed to thrive and be successful. And women are starting more businesses than men. That now your point about them not receiving venture capital is absolutely right. And so I think that creates a pretty significant opportunity for enlightened and venture capitalists. Now the funny thing is, I'm sorry, but it's an interesting problem, and it's also an interesting just how venture capital firm. Most venture capital firms, if you look at who the partners are and you look at their backgrounds, they're basically all the same. They went to the same universities. They were in the same clubs. They basically, if you've ever seen the HBO show Silicon Valley, they nail it. I mean, they nail the caricature, and it's just no surprise that the people that they invest in, look like them, have backgrounds like them, and so forth. And obviously, I think what solves that is that people that are kind of say, gosh, there's a lot of talent and there's a lot of great opportunities where the person didn't go to Harvard or Stanford, and the person doesn't look exactly like, it doesn't have the same background as I do. And I think this is what's exciting about this global Silicon Valley as well, which is, 10 years ago, 92% of all venture capital was United States, and most of that is Silicon Valley, where I live. Last year, 55% of all venture capital was outside the United States. And so I say what happened between San Francisco and San Jose, all within this kind of club, is all of a sudden becoming democratized around the world. So I say it's gone from Austin to Boston, from Chicago to Sao Paulo, from Mumbai to Shanghai to Dubai. That's the global Silicon Valley, and it's booming. And so Africa, is a place that is booming. I mean, it's booming in terms of opportunities. And so I think you're going to see this global Silicon Valley continue to spread and continue to democratize, both from a geographic standpoint and from a gender standpoint, from a race standpoint, all this stuff, because opportunity is booming everywhere, and capital is going to find that return. And I think it will be the traditional venture capitalists that are participating in that.
Well, I sure hope so. But so should investors and business leaders, should they be concerned with ESG principles? Should CEOs in the future, should they be more focused on being recognized for the good, the purpose of their companies, or should they continue to focus on, obviously they have shareholders, should they continue to focus on profits? Because it's a real sort of dichotomy, profit or social benefits. And then you have investors who are looking for good returns. So how should they juggle all of these issues?
I fundamentally believe in my bones, and I think this will start to bear out with numbers. I mean, you can see the future, you really can. And so the companies, the CEOs, the managements, the boards that are focused solely on short-term profits, which has absolutely been where the world has come, is driven by short-termism, hedge funds and the institutional investors demanding, results for, this quarter. And if you didn't have this results, they were fired or big changes happen. Those companies are going to get left in the dust. You have to, this whole idea of having multiple stakeholders, is not a PR marketing thing. Some people might believe it, and again, I think people are a victim of their backgrounds. But the Jack Welch CEO, the classic kind of, grind it out and put up the numbers this quarter, and that's all that matters. Those companies are going to be left in the dust, because it's not just the shareholder, it's the employee, it's the customer, it's the community, it's the environment. And if you can't manage all that, the reality is, why does that matter? Because with most of the businesses that are being created today, and the business will be created tomorrow, it's all about your people. And so the fact of the matter is, Generation Z for sure, and millennials as well, they don't want to work at a company that doesn't have those values. So you're not going to have any, if you are just focused on short-term profits, you're not going to have any talent that works at your company. And by the way, this Generation Z and the millennials, they're not going to buy product from companies that don't have the values of multiple stakeholders and don't look at purpose-driven businesses and businesses that don't stand for anything more than just a product. And so I think the really positive news is it's a little bit like gravity. It's happening whether people like it or not. And so if you want to participate in that, you're going to need an enlightened view, and you're going to need to understand that that is where things are going. Because, by the way, I think it's super clear. It's not me just wishing that that was the way things are. I think that's the way things are, and certainly the way they're going to be.
So in Nigeria, for example, recently we've had a lot of founders and investors at war, as you've just described. Investors don't feel that the returns that were promised are coming through. So CEOs have been fired, they're in court, lots of litigation, et cetera, et cetera. So in your view, do you think that trust will become the ultimate currency? How do people ensure that the founders ensure that their outcomes that they're looking for and the outcomes of their investors? Because too often we rush into these partnerships. We just say, I need money, this investor comes with money, and we get into bed together without really thinking about whether we have the same outcomes or the same sort of purpose. How do you think trust plays a role in making sure that this relationship works for the long term?
It's a fantastic question, and it's a critical question, and I think it's really important that every entrepreneur and investor have this very open understanding. So entrepreneurs and company management, certainly entrepreneurs and startups, people say, oh, it's about, you run out of capital, or there's not capital available. It's not that companies run out of capital or time. What they run out of is trust. And what I'm saying there is, we just had Bill Solomon, who's legendary Harvard Business School professor, who'd been at Harvard Business School for 40 years. He said that he has seen over 10,000 business plans since he's been at Harvard Business School. And he said in his entire career, he's only seen 3 management teams that have met or beat the plan, but a lot of successful businesses, but only 3 that actually beat the business plan that they provided. But the key is you have these challenges and you have different things that come up, and you say that, here's the signpost on the highway. As these challenges or these issues come up that are different than what expected, instead of hide them underneath the bed, you're very transparent and open in terms of what those are, and that investors need to be more of a partner and less of a master, right? They have to be, because you're partners in this enterprise, and business is hard. Being an entrepreneur is hard. Creating, solving problems is hard. And so if the capital thinks that they don't have to understand that nothing happens exactly according to plan, and that they're not they need to be part of the help, then it's not going to be a very successful partnership. But I think you see the best investors are the ones that have that realization, and they help the entrepreneur, they help the company move over these challenges, around the challenges, move forward, and really are a true partner. And the entrepreneur needs to understand that they've got to be open with, they can't just be talking about the good stuff. They have to be sharing the bad stuff too, because there's always both. And I think that's a mistake that the entrepreneur makes, is where they try to pretend everything's perfect, because nothing's ever perfect.
I guess that's true. Sometimes it's because they believe they wouldn't attract investors if they don't sort of provide really sort of over enthusiastic projections. And then when everything doesn't meet their targets, then they're too scared, like you say, to go and have that dialogue with the investor. Or they believe that the investor is not a partner, it's more like a master, and is not going to be tolerant to that kind of information being passed on to them. Yep. So do you see any long-term changes in the horizon, let's say in the next 5 years, in the type of investment process. So in terms of the due diligence, in terms of rate of return, in terms of types of things that investors will be investing in, maybe like technical assistance or capacity building, those types of things? Or do you think it'll just be the normal type of investments that we've had to date?
A few things. I do think you'll see markets mature. I mean, I'm not being, I'm happy to live in Silicon Valley. I'm also fortunate I get to travel around the world. I will say that on one hand, every market's different, and there's different levels of experience and kind of position, if you will, in the evolution of this global innovation ecosystem. But I'll also say all markets are the same. And what's the same about them is that, entrepreneurs fix things, they solve problems, they address needs, and capital sources want a return on their capital. Now, what needs to happen is they want to return their capital. And again, by the way, that return could mean different things. And I don't think you'll see big problems being solved if the expectation is there's going to be a lower return on that capital. I think that the greatest accelerators for change and for changing the world for good is when you align, solving big problems and really helping, move the world forward. And there's a corresponding return on that. And by the way, those returns you're seeing increasingly, those returns are being donated to charity, but nonetheless, capital will seek its highest level of return. And that's just sort of the natural law. So the bottom line to your question is I can't predict, where the areas of opportunity will emerge that we're going to attract entrepreneurs and capital, but you do see this sort of natural flight where entrepreneurs race to where there's white space, and they race to where things are, emerging. And the smart capital increasingly is this kind of transparency of capital, if you will. So that capital can find where these great entrepreneurs are solving these important problems. There's lots of capital out there, and I do think that efficiency in matching those two is becoming easier. It's not as easy as it needs to be, but it's better. And I think if you're going to fast forward that 10 years, I think it'll be amazing. I mean, I'm an optimist, but I don't think I'm an optimist that's not. I think you've seen this kind of infrastructure and ecosystem develop, and then I think that's good news.
I sincerely hope so. So for you, would you say that impact investment now is here to stay? Or is it like, one of those like new niches, it'll remain as a small niche and in the total sum of funds available? Or how do we really tap into that, especially in Africa? Because we continue to see, there's been a lot of interest in Africa in terms of the fintechs and the amount of money that's coming to Africa in terms of growth. Funding has increased, but these tend to go to not indigenous Africans coming up with business ideas and solutions. They tend to go to foreigners based in African countries who know how to make a pitch, I guess, or belong to the network, old boys network that you've described, and therefore they feel more comfortable giving those funds. So what do you think it will take? What do we in Africa need to do, entrepreneurs, because that entrepreneurship is one of the biggest forms of job creation, which has become super vital. So how do we sort of, get them to see us in a more serious light? What things do we need to do as entrepreneurs to increase our chances of getting the right type of funding?
Yeah, so a really wonderful point. And what I'd say is talent's pretty equally distributed around the world, but opportunity is not. And the safe way is to say, well, there's economic opportunity in places like Africa, and so therefore somebody who had the experience in the Silicon Valley or somewhere else going to Africa and then being back to address some issue, that's comfortable. But to your point, that's not going to be where you see this all flourish. So the flourishing happens when basically that talent that exists indigenous to geography, specifically your question in Africa. You're not only, the talent exists, so how do you provide the know-how? And ultimately what you see is somebody has some success, and from that success, 3 things come from it. And from those 3 things, 9 things, and 9 things. I mean, that's how Silicon Valley is not that old. And how Silicon Valley became Silicon Valley, was effectively 2 guys in a garage. And from that, it mushroomed, and over 50 years changed the world. That same thing can happen that same thing can happen in Africa. But it's getting that kind of know-how. And frankly, I mean, it sounds to me like a pretty great investment opportunity to try to help invest in that ecosystem and develop that talent in a way to give them. It's not only the know-how. It's a longer question. We should talk afterwards, because I have some ideas that just spawn from even your question. But it's giving the confidence and the connectivity, and it's really a function of, it's like when Roger Bannister ran the 4-minute mile, and before he ran the 4-minute mile, scientists said it was impossible for a person to run a mile faster than 4 minutes. And so when he broke the 4-minute mile and collapsed at the end of the finish line, people thought he died, because that was what was supposed to happen. Your heart was supposed to explode. What was so interesting about Roger Bannister breaking the 4-minute mile, after he broke the 4-minute mile, 6 weeks later, somebody else broke the 4-minute mile. In the next 18 months, there were 6 people that broke the 4-minute mile. Today, you have teenagers that break the 4-minute mile. You have people in their 40s break the 4-minute mile. It's routine. But what changed, the distance didn't change, the mindset changed. And I think that's the point of, I think a big part of what you see things to really accelerate in Africa is when people see, okay, here's how I can do it. And that doesn't happen from somebody else. It happens from, that's ground up. So, yeah, we should talk after. I've got some ideas, and we had a conversation before, but I'll tell you more of some of the things that we're doing, because it could be interesting, maybe perhaps for
I think we're running out of time, Michael, but that has been a very insightful session. I think, changing of the mindset is really very important. Getting things done is very important. Africa not being left behind is very important. Creating innovation hubs, we're seeing some of them spring up across Africa. Excuse me for being Africa-centric. It's where I live. It's where I see the greatest opportunity and the greatest gaps. And so I think this would be a wonderful, if we can really get Africa on the map in terms of impact investment, gender lens investing, not excluding the ESG investing as well, to get us going. So just to sort of like wrap up a session, giving all the things, wonderful things that you have said, as investors become more risk averse, industry insiders expect that the funding slowdown to prove more damaging for young companies, as VC are likely to, venture capital firms are maybe likely to look more at the established startups. So new startups really have to think about how they fit this, purpose lens, and how they fit the return lens, and how they're looking at a multi-stakeholder approach to really be able to maybe attract the kind of investments that they need. The stark reality is that they have, early stage startups will really have to sort of knuckle down and be very innovative in their approach. Flexibility and expediency should be the cornerstone of access to finance to support entrepreneurs in this recovery process. We don't want to have long investment processes where before, by the time approval is given, everything has changed in the marketplace and the business model is no longer viable. And founders must, there's an old Chinese proverb that says, founders must decide on 3 things at the startup: the rules of the game, the stakes, and the quitting time. And I think that most times founders don't think about that. They think they're going to be there forever. They hop into bed with anybody, and they don't really think about whether those rules of games are aligned with their interests and whether it's aligned with their purpose. So I believe that if they can do all those things, that it will make for a very good partnership with their investors. And as you suggested, maybe having multiple investors rather than just a single investor. So at the end of that, I would like to say thank you, Michael, I look forward to catching up with you afterwards. Thank you for all your wonderful insights. Thank you for joining this session from California so early in the morning. I hope you all enjoyed the session.